Shall we continue? Yes. So friends, one second. Irrespective of residence status, income from business source will be taxable, okay? So if he is ROR, then will the profits from a profession in USA, which was set up in India but received in USA, will be taxable? Profession in USA, which was set up in India, if it's an ROR, yes, that will be taxable. Niranjini, yes, the answer is yes, it will be taxable. Hari, next session will be started after 15 minutes. We are about to start, okay? Can you please explain Rule 126 in short? Whenever you are a crew member of a foreign going Indian ship, from date when you enter in the CDC, that means date when you enter in the ship, from that day till the date when you exit from the ship, you can exclude, okay? Indian citizen residing in tax haven country will not be taxed in India for his foreign income. No. For foreign income, no. Why? Because he is basically an RNOR. For RNOR, accrued in India, first received in India, or accrued outside India due to professional business controlled in India will be taxable. Hari, I hope you got the answer. Okay. Yes, so friends, let's continue our discussion. We were discussing, what is this? Yeah. So we were discussing residential status. Now let's continue let's solve one more question, which is related to deemed resident. Okay. It's November 2022 6-mark question. So can you just read question number 2 in 5 minutes and give me the answer? Go through this question number 2. This is November 2022 6-mark question. So just go through this and give me the answer. Let's not solve any basic question, okay? In revision session, basic questions are actually not required. So that's why I'm not making you solve basic questions. It's better to talk to KSA team itself about the recorded classes. I'm not sure whether they are recording and providing this. Maybe. So Vijay, so please communicate it to the, what do you say, KSA team itself, okay? So in examination, when it comes to chapter 2, residency status, either the question will be something like this, determination of residency status, or determination of residency status and computation of total income, something that we have sold in Q1, something related to Q1, or there can be one more possibility, compute the total income. If you are ROR, RNOR, NR. These are the three types of questions that they normally ask from chapter 2. One question will definitely come and it will carry around 5 to 8 marks, we can say. Normally 6 it is, but 5 to 8 mark you can expect. It's a short chapter, okay? Chapter number 2, residency status, is a short chapter. Yeah, Ragul already have an answer, 23 lakh. Very good. You have 3 questions under that, okay? You need to read all the 3 and give the answers. Are you all able to follow what I'm saying? Have you all understood the concept? I should ask this earlier itself, but better late than never, okay? So, have you all joined that WhatsApp group? WhatsApp group, what group it is? WhatsApp group, right? Have you all joined that WhatsApp group of KS Academy? I think they have shared this in the WhatsApp group, okay? No, then join. I don't know how to join. I mean, how to join? I think they will automatically add, okay? Send the link. Okay, I don't have the link. Okay, you talk to the team. So shall we do it together? Good. So listen. Shh. Listen. I hope you have an answer. So I got some answers from online also. Short recap for NR. I was having network issues, so couldn't understand. NR, income accrued in India or first received in India will be taxable. Okay. 1 hour or no hour. Okay, you have given the answers. Excellent. I think Priyanka have shared the question sheet in this chat also. Very good. So let's solve it together, friends. So let me read the question from here. Mr. Sarthak, an individual. So friends, one more thing. See, listen. In exam, definitely they will create something new. Are you all with me? Whenever you see a question, what you should do is read it peacefully, okay? Read it peacefully and understand what is the circumstance. Don't imagine, oh, this question I have never seen in my life. Gone. Don't write the exam with that mindset. Whenever you write, always expect a new question in exam. Are you with me? Always expect a new question in exam. Always try to read the concept, understand the concept, then go write the exam confidently. That is more than enough. It is not necessary that the question that you have done should come just like a copy paste and all. Don't expect that. If it comes like that, take it. Okay, that's it. Don't expect that. If comes, take it. That's it. So, Mr. Sarthak, an individual and an Indian citizen. Okay, so they are saying Indian citizen living abroad. Dubai. Okay, Dubai. You know about the Dubai. And they themselves are saying a tax haven. What is tax haven? We can say tax haven. Normally it is pronounced as tax haven. What is tax haven? No tax. They are not charging any personal income tax since 2007 and never came to India for a single day since then. So he haven't visited India since then. Earned the following income during the previous year 23-24. So he is a citizen and never visited India. So the question is leading us to deemed residential status. Are you with me? Now, from the question itself, you will get that clues. Are you all here? Then particulars have been given, amount, then income accrued arise in India, income deemed to be accrued arise in India, income arising Dubai for profession set up in India. A lot of information is there. So point number 1, what is the question? Determine residential status of Mr. Sarthak and taxable income for the previous year 23-24, assuming no other income arise during the previous year. So first, let's determine the residential status and taxable income. To determine the residential status, the questioner is very clear. He never came back to India. So the only possibility is deemed resident. So how do you become deemed resident? First of all, you have to be an Indian citizen. That is already given in the question. He is an Indian citizen. Now his income, total income from Indian sources should be more than 15 lakh. So let's compute total income from Indian source. Compute total income from Indian source. Then total income from Indian source. What is the first income? Income accrued or arised in Dubai, not taxable in Dubai. Income accrued or arised where? Dubai. Do you have to count that as a part of that for checking that 15 lakh limit? No. Not accrued in India. They are not talking about any receipt. So what is the assumption? Dubai income will be received in Dubai. Will a person will catch a flight and come and take that income from India? No. It will be received in Dubai. Then what is next? Income accrued and arised in India. That you have to take. Income arised in India you have to take. And how much is that? 5 lakhs. Then what is next? Income deemed to accrue or arise in India. It's a deeming fiction. That definitely you have to. Deem to accrue means it is accrued in India. So again, accrued in India. Technically, it is basically section 9. Okay. So what is that amount? 8 lakh accrued in India. Then what is next? Income arising in Dubai from a profession set up in India. You tell me what to do. For determining that 15 lakh limit, always add income accrued outside India due to business or profession either controlled or set up in India. So you need to add that income as well. So Dubai income but profession in India. We can write like that. So 10 lakhs. Now that's it. Can you tell me how much is the total income? Come again? 23 lakh. It is more than 15 lakh. He is an Indian citizen staying in a place where he is not liable to taxes. Plus Indian source income is more than 15 lakh. So what is the conclusion? What is the conclusion? Deemed resident. You tell me if he is a deemed resident, then what is the conclusion? He is a RNOR. You don't have to worry about that conditions and all, because every time always deemed residents are always RNORs. So we can say he is an RNOR, and they are asking us to compute the total income as well, taxable income as well. Now you have to write another step. This should be the way you have to write an exam. Are you with me? First you determine whether it is 15 or more. Then you have to do another set of computation based on his residential status. So as you all know, he is an RNOR. So which all are the incomes that are taxable in India? Income accrued or arised in Dubai, not taxable in Dubai. Is that taxable in India? Income accrued or arised in Dubai, not taxable in Dubai. That is not taxable in India. Not taxable in India. Income accrued or arisen in India. Is that taxable? Accrued in India. Is that taxable? Yes. 5 lakhs shall be taxable in India. Then income deemed to accrue or arise in India. Is that taxable? Accrued, deemed to accrued or arised in India. Definitely it is taxable. How much is that? 8 lakh. என்னடா இது? டேய் யாருடா அது? இந்த மாதிரி காமெடி பீஸ் எல்லாம் பண்ணாதே. ஓகே. Now, what is next? Income deemed to accrue or arise in India. Then income arising in Dubai, from a profession set up in India. So what is that? Income arising in Dubai from a profession set up in India. What to do? He's an RNOR. Do you remember what happens if you are a RNOR? Accrual, first receipt, and income accrued or arise outside India due to business controlled or profession set up in India also have to be added. Yes or no? So you also have to add that. So what is that? 10 lakh. So we will write Dubai income profession in India. That will be 10 lakh. So the amount is same, 23 only. Are you all with me? Are you all with me? Very good. Now friends, listen. What is next? Second, there is one more question. What would be your answer if income arising in Dubai from profession set up in India is 2 lakh instead of 10? If this is 2 lakh instead of 10, then what would be the answer? If this is 2 lakh, then what will be the total income? It would be exactly 15 lakh. If the total income is exactly 15 lakh, then he is NR. He's not RNOR, he will be NR because he haven't stayed in India and he is not a deemed resident as well. So his status will become NR. If he is an NR, you tell me out of this, which all are the income taxable in India? First one, income accrued or arised in Dubai. Anyways, not taxable. Number two, income accrued or arise in India, taxable. Income deemed to accrue or arise in India, taxable. Income arising in Dubai from a profession set up in India, not taxable. Are you with me? If a status is NR, only these two incomes will be taxable in India. And how much is the total of these two? 13 lakhs. Is that clear? Is that clear? Now, they are asking one more question. What is the third question they are asking? What would be your answer if Mr. Sarthak born in Dubai and his parents are born in India? He born in Dubai and his parents are born in India. You tell me what should be the answer? He will be considered as a... but there is a thing is there. If he is born in India, he is actually born in Dubai and his... parents are born in India. So there is actually a problem. According to the original law, you cannot be a citizen of Dubai simply by birth. It's not possible. You have to be an Emirati. Okay. Actually, it is like that. You have to be a pure Emirati. Then only you will become citizen. It is not like India. You cannot simply come and apply for the citizenship. You cannot go there and apply for the citizenship. So this question, you can answer in two ways. Because in the original answer given by the ICAI, they are giving alternate answer. Because it is not necessary that you should know the citizenship rule of Dubai. I told you that you cannot be a citizen in Dubai. Maybe some of you might be knowing this law. Are you all here? So to become a citizen in Dubai, you have to be an Emirati. That means you have to be a pure Dubai race or GCC country from itself. You have to be from. Here he settled over there and his parents are actually Indians. So what to do? You can answer it in two ways. Option number one, he is considered as a Indian citizen only. He cannot be a Dubai citizen. Why? Because you cannot get the citizenship by out of birth over there. Are you with me? That is option number one. If we are assuming that, then what is the answer? No change in the answer. The answer will be the same as Q1. Are you all here? And if you are assuming that he is a citizen of Dubai, then what will be the answer? Non-resident. And the answer will be the same as of 2. Are you all here? Not 2. Then income will be, I will do it together. Okay, don't worry. So option 1. Option 1, assuming Mr. S is a citizen of Dubai. Assuming Mr. S. Sarthak is a citizen of Dubai. If he is a citizen of Dubai, then he is not a deemed resident in India. Is not a deemed resident in India. Why he is not a deemed resident in India? Hello, why he is not a deemed resident in India? Because we are assuming that he is a citizen of a Dubai. He applied for the citizenship. Actually, there is no such law in Dubai. You cannot simply apply for citizenship in Dubai. Not possible. You can be a resident of Dubai. You will never be citizen by application. Yeah. So what you need to do is not a deemed resident in India, and hence your status will be non-resident. If your status is non-resident, then can you compute the total income? Which all will form part of the total income? If you are a non-resident in option 1, then what will be the income? Income accrued or raised in Dubai will not form part of the total income. Income accrued or raised in India will form part of the total income. Income deemed to accrue or rise in India will form part of the total income. Income arising in Dubai from a profession set up in India will not form part of the total income, and total income will be 13 lakhs. This is what the examiner intended. This is the intention of the examiner when he created the question. But unfortunately, according to the original Dubai law, if we have written country X or something, then there would have been a different answer. Okay, if you have written country X or something, there would have been a different answer. But what to do? He want to make it realistic. That's why we have written Dubai over there. Unfortunate. So what is option number 2? What is option number 2 or alternate number 2? We are assuming that a person, this person, Mr. Satak, Mr. S, is a citizen of India itself. Alright, he is a citizen of India itself. So if you are assuming like that, then what is his status? What is his status? Deemed resident, that too RNOR. So we are saying that deemed resident RNOR. Then how much will be his total income? 5 plus 8 plus 10. That will be 23 lakh. If he is RNOR, then his total income will be 23 lakh. Is that clear? In exam, you need to take only one. Either option 1 or option 2. Don't write alternate answer and waste your time. Don't waste your time, okay? Only answer 1. That is more than enough. Are you with me? If the position of the question is not clear, then always go for an assumption and write the assumption. Are you with me? In my personal opinion, this is the better assumption. This was the intention. But you can assume like this also. Are you with me? Option 1 will be more better. Okay. Yes. 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 Indian origin will not become a deemed resident. You have to be an Indian citizen for becoming a deemed resident. No, he haven't visited India. In 23-24, he haven't visited India. So whether he's an Indian origin doesn't make any difference. He'll be NR only. Online friends, I hope you are with me. There are certain doubts. 1 second. Sir, if he had stayed 120 days in the PY and earns exactly 15 from Indian sources, but he stayed for 365 days, is he a non-ordinary resident? 120 days? 120 days or more is enough. Yes. But not stayed 365. Then no. Earns exactly 15. No. NR. Only Indian citizen can be deemed resident. Yes. Sir, to be deemed, I am a deemed resident, should be fulfill all the 3 conditions for deemed resident. Yes. Why business setup in India not taxable? That you have to ask to the CBDT, okay? It's a law, right? Sir, if he just born in Dubai and he got a Dubai citizenship, if he got Dubai citizenship, say for an example in future, Dubai changed the law and he got a Dubai citizenship, then what is our problem? No problem. He is a non-citizen in India. Even though he is born in Dubai, he will be Indian citizen, sir. Yes. Yes, because in Dubai, you cannot, you will not get the citizenship only by, by birth you will not get normally. You have to be an Emirati for that. Yeah. This clear? Is it clear? Shall we move on? Oh, thank you. Motivation. Very good. Yes. Thank you. Thank you. Alin Nawaz. I'm sorry, certain names I'm not able to pronounce. Very good. Means ancestors should be Emirati. Yes, yes, yes. Emirati means your father, grandfather, everybody should be from that province only. Okay. I don't know how many years you have to be there that you have to read the Dubai citizenship law. So for deemed resident, income in Dubai won't be taxable. No, income in Dubai is not, you don't have to pay taxes in India. It should be either accrued or first received. Yes. Moving on. So that's it. These are the main things in residential status. But when you are going for exam, do refer section 9 also. Okay, do refer section 9 also. That is deemed income as well. Are you with me? Are you with me? Yes. So these are the main things that I want to discuss. And I think one more question we have. Yes, we have one more question in residential status. May 2023, 3 mark. So can you solve this? This will be some variety. I don't exactly remember this question, but just solve it. Is Indian citizen person Indian origin differs? Of course, citizen means a person who have voting right in India. Origin means your ancestors are Indian persons. You are not. Why Dubai is a tax-free, sir? What shall I say? Dava ishta. Okay. If I am the Prime Minister of India, I can say, maybe in future, no taxes in India. Dubai is already rich, they don't have to collect any taxes. It's not like India. Oman is going to introduce tax soon. Okay. Corporate tax. You have corporate tax over there, okay. We are studying Indian income tax law, okay. Stick on to that. Adi idu mudi, adukapra adu padi, okay. Are nor taxable? Okay, answer. Very good, very good. Excellent, Pradeep. Very good. Taxable income 16.5. Very good. And there is a sub question. In that sub question, listen, Will your answer change if he is a citizen of country X? Okay. Yeah. There is a typo error. Country X. Ready with the answer? Ready with the answer? So let's solve it together. Small question. So, yeah. Mr. J. Chand, again, May 23. What's the mark weightage? 3 marks. They might have asked them MCQ question also in relation to residency status. That's why the descriptive question carries only 3. Normally it is like that. But we don't know what exactly is the MCQ question because institute want to keep it as a surprise. They want to surprise the students, so they've never gives out that previously asked MCQ question. I don't know what they are doing, but we have to follow the norms of the institute. Yeah, we are not supposed to question, we are supposed to follow. Yeah, so Mr. J. Chand, an Indian citizen, left India for employment in country X on 5th June 2014. So he left in 2014. He regularly visited India and stayed for 60 days every previous year since then. So J. Chand is an Indian citizen residing outside India, comes on a visit to India 60 days every year. And first of all, 60 plus recessive condition is not applicable. In this way, you should answer. Whenever you start reading, you should get the answer in this way. Are you with me? I hope you are doing it right now. You will be able to, you are getting the answer like that. That's why we should understand the concept rather than by-hearting the number of days. Are you all here? Moving on. However, in the financial year 23-24, he did not come to India at all. Okay, thank God. So that we don't have to count. He owns a commercial building in Delhi, fine, which is let out. He has also set a retail store in India, which is controlled by his brother from India. He provides the following information to you regarding his income for the financial year 23-24. So they are saying Indian citizen, residing outside India, comes on a visit to India every year 60 days. That will not make him a resident in India. Why? Because 60 plus 365 day condition is not applicable for that particular person. Are you all here? So he will not become a normal resident. So the only possibility is deemed resident. But for becoming a deemed resident, you have to check the total income from Indian source. And the information is given in the question. Income from commercial building in Delhi. How much is income from commercial building in Delhi? 12 lakh. Computed as per the provisions of Income Tax Act. What is this computed? After every deduction. If the question uses the word computed, then what does that mean? There are certain words in examination. You have to be very careful with certain words. Listen. Okay, this is actually a common note. Nothing relation to this question. If they are simply saying rent received or rental income, say they are simply saying rent. We can say simply saying what? Rent. That means what? It is not subjected to deduction. Are you all with me? If they are using the word rent computed, then what does that mean? Every standard deduction and other deduction have been already adjusted. Now they will use another word. Net. Dividend received. Net. They will use the word net. What does that mean? Dividend, they will use the word net. What does that mean? Say net 90,000. What to do in exam? Net means they are referring it to TDS. You should know what is the rate of TDS involved in dividend. What is the rate of TDS involved in dividend? Under section 194 of Income Tax Act, the rate of dividend shall be at 10%. Are you with me? Are you with me? In such case, you need to gross it up. Gross up. Including the dividend, you have to show it as your income. And how much will be the dividend declared will be some amount. They have deducted 10% as TDS and you receive 90,000 with you. So you tell me how much is the total dividend? 90,000 divided by 90%, that will be 1 lakh. It is called as gross up. Are you with me? Say they are simply using the word dividend income. Then that is the total income. Don't gross up. They are simply saying dividend income. Then that is the total income. Are you with me? Now there is another word that is the problem, troublemaker. They will simply say dividend received. Then what to do? It has two interpretations. Number one, every person who declares dividend is subjected to deduct TDS. So you deduct, say for example, KS Academy. We all are shareholders of KS Academy, and we have what? We received some dividend from KS Academy. When they are saying received some dividend from KS Academy, that is always net. This is the most logical assumption. So we need to gross it up. But in certain passages and questions, they are not grossing it up. They are assuming it as gross. This is there in finals also. And inter as well as in final, these kinds of things are there. So what to do? Write the note. And what should be the note? Under section 194, dividend for TDS is 10%. We know that. That is the point. You have to communicate that you know the dividend consent. But I am assuming that it is gross since the question is not clear. Or I am assuming that it is net so that I am grossing it up. Any answer you can write. Are you with me? Are you with me? Whenever the word received is there in the question, be a little cautious. Always write that TDS provision as a note. Either you gross it up or you consider it as gross. Both are fine. Is that clear? All right, coming back to our question. Where were we? So whenever these things come to my mind, I'm directly shooting it. Otherwise, I'll forget. Okay, that's why in between I'm saying all these things. So 12 lakh is the income which is computed. Now, income from detail store, that also is computed. That is 4 lakh 50,000. How much is the total income from Indian source? 16 lakh 50,000. And it is more than 15 lakh. And hence, what is the conclusion? Deemed resident. He is a deemed resident. If he is a deemed resident, then one more conclusion you can write. What is our conclusion? RNOR. He is a deemed resident in RNOR. Now, country X does not tax any income on any individual on their income, as there is no personal income tax rate. All right. That also have to be checked. Okay. There shouldn't be any tax liability as well. Determine the residency status of Sri Chand. And what is the residency status? Deemed resident, RNOR. You have to write it like that. Don't write deemed resident alone. You will lose marks. You have to write deemed resident. And all the deemed residents are RNOR. Done. Now, will your answer change if he is a citizen of country X? What will be the answer? If he is a citizen of country X, he is not a deemed resident. And his days of stay is less also. And hence conclusion is he is a non-resident. Are you with me? Are you with me? Is that clear? Is this clear? Very good. And doubts, what is the doubt? Total income, deemed resident. Okay, answers. Very good, very good. Computed rent means deductions are subjected. Yes. He left India for employment, so 182 days condition is applied for him. Yes. Why we are taking the provisions of deemed resident? You count the number of days. You read the question properly. He stayed for 60 days every previous year since then. That means you don't have to take 182. He stayed in India for only 60 days. But he is not there in India for previous year 23-24. Then what is this sentence? He stayed for 60 days in every previous year. He's coming to India for 60 days every PY. Okay. He's not stayed in India, so we will check deem the concept. Whether employment provision is only applicable for relevant PY? Yes. Again, one explanation. What is your doubt? This question, sir, exam la RNOR provision right pannanuma, sir. Yes. My Tamil is not that good, but I can understand. Okay. When you chat, it is better to use English and Tamil mix. Okay. Because I'm very bad in reading Tamil. So please don't misunderstand me if I read something wrong. Okay. So if we take assumption dividend grows up, we want to write TDS note. Yes. You have to write that note. Sir, should we make it gross even though the question is dividend received? That's what I told you. Either gross it up or write the note of dividend. We know that under 194 dividend is 10%. That note should be there. Okay. Yes. Salary, they are using the word net. No, normally they don't, because salaries are subjected to average rate. So the full details have to be provided for grossing it up. It's not like the other flat rates. Average under one salary under 192 is average rate. So salary normally they will not say like that because it's average rate. You should provide all the details for computing the TDS. They're using the word computed means they have deducted that 50,000 standard deduction and all. Yes. Sir, why are you grossing up here? But you had net up the IFFP, income from house property. Why different treatment? My God. What are you asking? The one word was computed, okay? If you use the word computed, that was another circumstance, okay? Rent computed means you don't have to gross up. Rent means the total income. Computed means subjected to standard deduction. They use the word net only, you have to do the gross up. Okay. Mr. X left India on 22-23. Okay. For his employment. Current PY 23-24. Is, in this case, employment provision is applicable. No. Because in this case, you are residing outside India. Comes on a visit to India. Only that year you leave India, that employment provision will be applicable. Okay. Okay. Yeah. So let's move on, friends. Let's discuss something in salary. Let's pick up the important things under the head salaries. Our first head. Are you all here? Are you all here? Now, listen. Say salary, in salary chapter, I have selected certain topics which are frequently asked. I have selected certain topics which are frequently asked. And we will discuss that topic in detail. Are you all with me? Are you all with me? Sir, in question, they are simply saying dividend. Okay. They are simply saying dividend. Simply saying dividend, then don't gross it up. In question, they are simply mentioned dividend received without mentioning net or gross. Then what we have to assume? Whether it is net or gross. That's what I've told you. You have to assume either it is net and gross up, or you have to assume it is gross. You can take your own assumption, but you need to write it, okay? All right. So we will start the next head, that is salary. So listen, friends. Salary have a lot of components. Salary have a lot of components. Whatever a person receives on account of employer-employee relationship have to be taken as salary. You're getting something from your employer on account of what? Employer-employee relationship. Then we can treat that as what? Salary. Are you all with me? So friends, listen. What all are the components of salary? Basic salary is there. Dearness allowance will be there. Then bonus will be there. Commission will be there. Allowances will be there. Perquisites will be there. Gratuity will be there. Then provident fund will be there. Retrenchment compensation will be there. Leave encashment salary will be there. Pension will be there. Are you all with me? All these receipts, your advance of salary will be there. Arrears of salary will be there. Yes. Whatever that you are receiving on account of employer-employee relationship. That's what I've told you. In examination question, we are discussing everything in an examination question point of view. Are you with me? So whatever in question, whatever if it has an employer-employee relationship, if you can establish that, that have to be assessed under the head salary. Are you all with me? In the main one thing under salary is what? Allowances. That is the first main thing under salary. What is allowance? Pin drop silence, sir. What is allowance? Sir, we don't know, sir. That's why we are here. So, allowance simply means a fixed amount paid by the employer to the employee to meet his expenses. Dearness allowance. Say for example, I joined a company in Salem. Okay. The company transferred me to Mumbai. My company transferred me to Mumbai, Maharashtra, Mumbai. So is the cost of living in Salem and Maharashtra, Mumbai same? No. The cost of living in Maharashtra was comparatively high. So the company is giving me a dearness allowance to meet up the extra cost of living. My salary will be the same, but they will give something extra. That is called as dearness allowance. Are you with me? Travel allowance. Every day I have to travel to different sites. Okay, say I'm the supervisor of KS Academy. I have to travel from this branch to another branch, from that branch to another branch. Every week I have to travel. For this travel, I have to incur some cost. The company is giving me a fixed monthly allowance to meet up that particular cost. Traveling allowance, food allowance, entertainment allowance. You will get different types of allowances for the cost that you are incurring. Are you all with me? Whenever you are getting an allowance in income tax, you have to divide that allowance into 3. From the perspective of income tax, you have to divide an allowance into 3. Now, one thing, friends, forget about 115 BAC. We will complete all the head, important things under the head. Then we will discuss 115 BAC. It is just like flipping the dosha. First side have to be prepared. Then only you have to flip the dosha, right? So stick on to the old slab rates. That is the first side. Once first side is properly cooked, we will flip the dosha. We will compare everything and I will understand what is 115 BAC. Are you with me? But you have to be patient. Don't come up with BAC in between. It is both to the online as well as offline students. Don't come up with BAC in between because I have clustered everything in relation to 115 BAC in the last chapter. This is the table. We call it as a comparison table. This is 115 BAC comparison table. We will discuss everything in relation to 115 BAC together. In between, if I start discussing, you will go mad. Okay, so for the time being, be patient. We will discussing 115 BAC towards the end. Now, coming back to the point, listen. Allowances can be divided into 3. With all of the 3 splits. Number 1, fully exempt. That means certain allowances which we are about to discuss are fully exempted. You don't need to pay any income tax for the fully exempted allowances. Second one, partly taxable. What is partly taxable? Out of that entire allowance, something is taxable and something is exempted or not taxable, we can say. That is called as partly taxable, or we can say partly exempted also. Are you with me? Third category is fully taxable. So we are not discussing fully taxable. Why? We will be discussing fully exempted and partly taxable. All other allowances will be fully taxable. Are you with me? Study the fully exempted as well as partly taxable allowances. Apart from that, everything will be fully taxable. Are you all with me? Are you all with me? Now, let's first understand which all are the fully exempted allowances. Can you read the first one for me? Allowances to High Court judges. Whatever allowance that you pay to a High Court judge, fully exempted. Especially house allowance paid to a judge for judges who do not avail himself an official house. That means normally the High Court judges will have a official residence. They will provide an official residence. Are you with me? There will be a judges avenue somewhere near to the Madras High Court. Everywhere there will be a judges avenue. That means the place where this judges resides. It will be like a villa. Okay. So say for example, one judge says that I don't want a villa. Rather you pay us what? An allowance for the house that I am living in. If that allowance is given to that particular judge, that is not required to be taxed in the hands of judges. Are you with me? Are you with me? So allowance to High Court judge, and which is that allowance which is exempted? House allowance paid to a judge. That is paid to a judge if he does not avail an official house. If he is availing an official house, that is what is the purpose of giving house allowance? Is it required? No. So if you are a judge and you are getting a house allowance, that will be fully exempted in your hands. How about the second one? Can you read the second one? Allowance paid by United Nations organization. Say you are working in a nodal office of United Nations organization in India. They have nodal offices in India as well. You are working as of a member or an employee of that UNO, United Nations organization's office in India, and you are getting allowances. That entire allowances received shall be fully exempted or not taxable. Can you read the second part? Allowance paid by UNO to its employees is not taxable. What is UNO? United Nations Organization. Whatever allowances that you are getting from UNO shall be fully exempted. What is the third one? Sumptuary allowance. Sumptuary allowance is just like an allowance paid to those persons who are in the honorary post. Okay, just like High Court judges and Supreme Court judges who carries this honorary post will get a sumptuary allowance. That sumptuary allowance is again fully exempted. Are you with me? And what is the last one? Allowances payable outside India under section 10 subsection 7. Allowances or perquisites paid or allowed outside India by government to a citizen of India for services rendered outside India are exempted from tax. What do you mean by this? Listen, we have embassy office overseas. Have you heard about Indian embassy? We have embassy offices. Say for example, we have an embassy office in Japan. We have an embassy office in Japan. Who pays salary to that Japanese embassy officials? See, the embassy office, Indian embassy in Japan is actually administered by Indian government. All the persons who are working in that embassy office will be our citizens. All the salary will be always paid by the Indian central government only. And there is a thing under section 9. What it says is, according to section 9, all the salary paid by Indian government to citizens working outside shall be deemed to be accrued or arised in India. Deemed to be accrued or arised in India. What do you mean by deemed to be accrued or arised in India? What they are saying is, Indian government, if they are paying some salary to Indian citizens who are working outside India, shall be deemed to be accrued or arised in India. What do you mean by this? Imagine the Indian embassy office in Japan. Our Indian citizens are working over there. Are you all listening? Are you all listening? Our Indian embassy officers are working over there. Indian government is required to pay them salary. But they are accruing the salary in Japan because they are providing services in Japan. Their receipt also is in Japan. That's why they have inserted section 9. All the salary paid by Indian government to that person who is working outside India shall be deemed to be accrued or arised in India. Deemed to be accrued or arised in India. What is deemed? We know that it is accrued outside India, but you have to assume that it is accrued in India. It is deemed to be accrued or arised in India. Are you with me? Are you with me? If say income tax department say it is deemed to be AK-47, then you know that this is a bottle of water. And online it is not coming. So say, what will I raise? Yes. Say this is deemed to be AK-47. Income tax department, if they say like that, then whenever you interpret Income Tax Act, this will be AK-47 only. We know that it is, I know that it is not AK-47. But if they are coming up with a deeming fiction, then you have to assume like that only. Are you with me? So, yes. So that's what they are saying. So here, whatever salary paid by the central government shall be deemed to be accrued or arised in India. Whatever salary. That means all the components of salary, they have to pay taxes in India. For all the components of salary, they have to pay the taxes in India. One of the component is allowance, which is fully exempted. That's what the government says. If we are giving you any allowance, you don't have to pay taxes for that particular allowance. For the basic salary, DA, commission, etc., you have to pay the taxes. For allowances, you don't have to pay any taxes. Are you with me? Are you with me? So that is the element that we were discussing. So coming back to that particular point, read this again along with me. Allowances payable outside India under section 10 subsection 7. That means allowances or perquisites. Perquisites are also exempted. That we will cover later. Paid or allowed outside India by government to citizens of India for services rendered outside India are exempted from tax. So you tell me which all are the allowances which is fully exempted. 4 types of allowances are fully exempted. Which all are the 4 types? Number 1, allowances to the High Court judges. House allowance to the High Court judge. Number 2, Any allowance paid by the United Nations organization to its employees working in India. If they are not working in India, you don't need to worry about their taxability. Are you all here? Now, point number 3, sumptuary allowance received by the High Court or Supreme Court judges. And point number 4, allowances paid by the central government to Indian citizens who are working outside India. Over the 4 allowances, fully exempted. Don't pay any taxes for this 4. Is that clear? Is that clear? Now, moving on to the next one. What is the next one? The second category, that is partly taxable allowances. Let's understand which all are the partly taxable allowances. Now, coming back to the point, friends, allowances which are partly taxable. Partly taxable also, we can say that partly exempted as well. Both are same. Out of that, first one, can you read the first one under that? House rent allowance under section 10(13)(a). So, what is house rent allowance? First of all, what do you mean by house rent allowance? You are staying in a rented premises. Your employer is giving you a allowance to pay your rent. That allowance you will make use to pay your rent. That is said to be what? House rent allowance. You received house rent allowance on account of employer-employee relationship. So department say that will be normally taxable under the head salary, but you can claim an exemption under 10(13)(a). That's what we are about to discuss. So can you read the first sentence under that? House rent allowance granted to an employee is exempted to tax to the extent of least of the following. So least of the following shall be exempted. Which all are the limits? Number 1, HRA actually received. What do you mean by HRA actually received? The actual house rent allowance received by you is the limit number 1. What is limit number 2? Rent paid minus 10% of salary for relevant period. The actual rent paid minus 10% of your salary shall be limit number 2. What is limit number 3? 50% of salary for the relevant period if the house is situated in metro cities like Delhi, Kolkata, Mumbai, Chennai. As per the preceding census, we only have 4 metro cities. Number 1, Delhi, Kolkata, Mumbai, and we are sitting in one. That is Chennai. Or 40% of salary for the relevant period in other houses. So we will explain this. Listen. Say my employer is paying me what? A house rent allowance. That house rent allowance received by me shall be taxable under the head salary. But I can claim an exemption under 10(13). Okay, what is this? What is this? What are you doing? Yeah, so coming back to the point. So listen, where were we? Completely gone out of the topic. Say for example, friends, my employer have paid me what? A house rent allowance. That will be fully taxable as a component of salary. That is the first thing. From that salary, from that component, I can claim an exemption under section 10(13)(a). What all are the limits? Number 1, what is the first limit? The actual allowance received by me. That is said to be the limit number 1. What is limit number 2? Rent paid minus 10% of the salary. Now, first of all, what do you mean by rent paid? See, why I am getting a house rent allowance? Because I am staying in a rented premise. Are you with me? That rent paid by me in a year, you have to compute and take. Minus 10% of salary. But there is a problem now. What is the problem? What is the salary? Because only for computing salary, we are computing this HRA exemption. Are you with me? And for the time being, we don't know what is the salary. So department comes up with a definition for that. So department defines the word salary for the purpose of 10(13)(a). What are the salaries for the purpose of 10(13)(a)? Salary for this purpose means basic salary DNS allowance if provided in the terms of employment. What do you mean by provided in the terms of employment? Whenever you join the company, in the employment contract, they have clearly mentioned that we will pay you DNS allowance of say 10,000 rupees. And they will make use of that provided DA for computing your retirement benefit as well. And there is one more DA. You are working with me in Chennai. I'm transferred you to Delhi for 6 months. And I've said during the 6 months period, I will pay you DA. When you come back, I will now pay you any DA. That is a kind of an unofficial DA. That you never consider. If DA forms part of the retirement benefit or forms part of the employment contract or the terms of employment only, you have to consider it. Are you with me? Are you with me? Now, moving on to the next one. Plus commission if it is expressed as a fixed percentage of total turnover of your employer. What is commission? Normally, the employer pays either fixed commission or the employer pays commission as a percentage of employer's turnover. Are you with me? If the employer is giving a commission as a percentage of employer's turnover, then only consider that. Otherwise, you ignore it for the purpose of computing exemption. Are you with me? While computing taxable salary, you need to take all the receipt. Only for the computing exemption and for what? And for this computing this limit only, you need to take basic plus DA forms part of the retirement benefit plus commission if it is expressed as a fixed percentage of your turnover. Just like a sales commission. Yes. But the commission shouldn't be fixed. Shouldn't be monthly. It should be a percentage of the total turnover of employer. Then only you have to take it. Otherwise, you have to ignore it. Are you with me? Are you with me? So, HRA actually received. Point number 2, rent paid minus 10% of salary. Now, let's do one thing. We'll name this salary, okay? We'll put a name for this salary. We'll call it as standard salary. This is not an official name. This is just a nickname given by me, that's it. Are you with me? So, what is standard salary? Repeat that standard salary definition. Basic salary plus DNS allowance if provided in the terms of employment plus commission if it is expressed as fixed percentage of turnover of the employer. So you take the basic salary plus DNS allowance if it forms part of the retirement benefit or if it is provided as per the employment terms plus commission only if it is a percentage of your total turnover. Are you all with me? Are you all listening? This is called as what? Standard salary. Repeat the definition again. Basic salary plus DNS allowance forms part of the retirement benefit plus commission if it is expressed as fixed percentage of your turnover. Thambi, repeat. Only then you will understand, okay? Only then you will study. Now, so this is what is called a standard salary. So what is limit number 2? Limit number 2, rent paid minus 10% of standard salary. Don't write standard salary in exam. Only write 10% of salary in exam. But for the understanding only, we are naming it as standard salary because the same definition is getting repeated. Are you with me? Now, what is the third limit? What is the third limit? 50% of salary for the relevant period. If the house is situated in metro city, that means if your house, that means the house in which you are staying is either in Chennai or in Delhi or in Kolkata or in Mumbai, then the third limit is 50% of standard salary. If your house is in Salem or house is in some other city, then it shall be 40% of standard salary. Are you with me? Are you with me? So 3 limits we have, either actual HRA or rent paid minus 10% of standard salary or 50% of standard salary if the house is in metro or 40% of standard salary if the house is in some other places. And what is salary? Standard salary. What is standard salary? Basic salary plus DA forms part of the retirement benefit plus commission if it is provided as a fixed percentage of the total turnover. Are you with me? Now let me ask you one question. What if I'm staying in my own house? Or what if I am staying in a house where I don't have to pay any rent? No exemption. Because technically, limit number 2 will become 0. Don't do it mathematically, okay? 0 minus 10% of salary will be negative. So whichever is lower will be negative and all. Don't do like that. So these are just exemption. Don't do it mathematically. Do it logically. If you are staying in a house where you don't have to pay any rent, you are not eligible for exemption. That full HRA, certain employers are very generous. They will pay what? HRA. Okay. So if the employer is paying an HRA and the employee is not staying in a rented property, then that full HRA will be taxable. What is HRA? House Rent Allowance. Is that clear? Is that clear? So the exemption is not available to an assessee who lives in his own house or in a house for which he has not incurred the expenditure of rent. So if you are staying in your own house or you are staying in a property where you are not required to pay any rent, don't pay any, you will not get any exemption for the HRA. I hope it is clear. Now, even though it is not a past question, let me give you a small question. Okay, this is a small question. I haven't included this question in your question sheet. Don't worry. We will solve it quickly. Okay. I'll give you a small question for a better understanding. So, quickly solve it. Okay. Just go through this question number 1. It's a good question. It's your institute's admittal question actually. So, just go through this question. Yeah, I'll come to the doubts. Okay. Bro, blur is not a Bangalore. Okay. My God. Metro city doesn't mean you have a metro. Okay. அப்படி இருந்தா கொச்சி metro city தான். We have a metro over there. Metro city means it depends upon the population. Okay. My God. Yeah, why not audible? Because I haven't said anything, okay? Don't worry. I've given this question and I just went to the washroom and came back. So don't worry. I haven't said anything. That's why it was not audible. So let's solve this question together, friends. Listen. Basic pay is given, DNS allowance is given, commission given, motor car for personal use, house and allowance is given. Find out the amount of HRA eligible for exemption to Mr. Rajkumar, assuming that the period of rent, he paid a rent of 1,000 per month for his accommodation at Kanpur. DA forms part of salary for retirement benefit. So what does that mean? It forms part of retirement benefit means it forms part of employment contract. That's why they are making use or they're using it for computing your retirement benefit. Mr. Rajkumar exercises the option of shifting out of default tax range. That means he don't want 115 BAC. Compute everything as per the old scheme for the time being. Then we will flip the dosha towards the end. Okay. So what you need to do is, first of all, you have to write the actual HRA received. How much is the actual HRA received? Actual HRA received. How much is the actual HRA? It is 1,000 per month. That is a rent. It is HRA. 900 per month into 12 months. How much will be the total? 10,800. Now, how do you claim exemption under section 1013A? Either actual HRA 10,800 or rent paid minus 10% of standard salary. So you should complete what? Compute standard salary. How do you compute standard salary? Take basic salary, that is 3,000 per month, plus take DNS allowance because it forms part of the retirement benefit. So you have to take that also, that is 600 per month, plus commission, if it is expressed as a fixed percentage of your total turnover. But do you have to take commission here? No, because they are saying 6,000 per annum. That means it's a fixed commission in a year. They have to say it is a percentage and they have to give the percentage as well. They have to say the percentage as well as they have to give the turnover as well. Then only you should take the commission. Otherwise, ignore the commission. Are you with me? Are you with me? So right now I have ignored that particular commission here. So you tell me how much is the monthly standard salary? 3,600 into 12. And how much will be the total standard salary? 43,200 will be the total standard salary. So limit number 2 will be rent paid minus 10% of standard salary. How much is the rent paid? 1,000 per month. So 1,000 per month rent paid. Rent paid will be 12,000 for a year. Minus 10% of standard salary will be 43,200. Sorry. 4,320. 4,320. So can you tell me what is the second limit? Come again? 7,680 is limit number 2. 7,680 is limit number 2. Now what is limit number 3? 40% of standard salary. Why 40% of standard salary? Because he is staying in Kanpur. Kanpur is not a metro because we have only 4 metros. Delhi, Kolkata, Mumbai, Chennai. So 40% of standard salary means 43,200 into 40%. Can you help me with the math? 17,280. 17,280. So 17,280. Whichever is lower. Which is lower? 7,680 is the lower figure. So 7,680 you can deduct. And how much will be the remaining amount? How much will be the remaining amount? 3,120. So they are asking us to compute eligible amount for exemption. So 7,680 should be the final answer. Okay, this is the amount that you can claim as an exemption under 1013A. This is an important adjustment, not an important question. Why? They will never give such a question in exam. This will be an adjustment in a lengthy question. Are you with me? Are you with me? Correct answer, sir. Thank you. All right. So yes, moving on, friends. Let's move on with the next item. That is HRA was the first item that we have discussed. What is HRA? House rent allowance. Now let's discuss the other items in that particular. I got correct answer. Don't worry. I understood. Only for fun sake I said. Okay. I understood. Very good. Very good. Yes. Because direct tax is actually very dry and boring. So I have to make something out of this, right? So that's why I said, don't worry. Don't take it seriously, okay? Yeah. So coming back to the point, friends, moving on to the second item under the second category, which was the category that we were discussing? Which was the category that we were discussing? Sir, why you not take commission? Why? Because commission is a fixed commission, not a percentage of your turnover. You have to take commission only if it is a fixed, only if it is a percentage of turnover. Hope you remember the definition. Commission only if it is expressed as a fixed percentage of total turnover. When they say simply 6,000 per annum, it is a fixed commission, not a percentage of your turnover. Okay, that's why I left it. Sir, if possible for today, will you discuss all RTP questions of September 2024? It is possible, but then I think I'll not be able to complete the chart. If it gets time, yes, for sure. Okay. Yeah. So moving on, friends. What happened to this OBS? It's gone. Give me a second, friends. Give me a second. Yeah. So friends, for the time being, just adjust with this. Okay. There is some problem with the OBS here. We'll fix that and come again. And that's what happened. You want this to be closed. Oh, is that so? So, can you just pull this down? Is it possible? Just pull that wire. No, don't worry. I'll do it. Oh, you are calling me Thanos. Then who are you? Iron Man, huh? Done? Yes. All right. Thank you. So, friends, moving on, we will discuss the other one. Which was the category that we were discussing? Category number 2. That is partly taxable or partly exempted allowances. So, second item under that is, can you read the heading? Special allowances to meet expenses relating to duties or personal expense is exempted up to the amount which is actually utilized for the purpose for which it was given to him under section 10 subsection 14 clause number 1. Very simple. The category which we are about to discuss, around 6 items are coming under this category. What is the speciality of this 6 category? Very simple. So the 6 category items are, the speciality is, if these types of allowances are given by the employer to the employee and the employee have utilized it for the respective purpose, then he can claim exemption. For example, first item, traveling allowance. Are you all with me? Item number 1 is what? Traveling allowance. Say you have received traveling allowance from your employer and it is for the official traveling and I have utilized that for the respective traveling, then nothing shall be taxable. But the problem is, I have received 10,000 and I have expended only 8,000. Then what will happen? 2,000 shall be taxable, or we can say 8,000 shall be exempted. That's why it is under the partly taxable category. If you utilize it full exemption. If you don't utilize it full, the balance will be taxable. If you utilize nothing, fully taxable. Are you with me? Are you with me? So, the point is, where these category of exemptions, you can enjoy an exemption provided you have utilized it for the respective purpose. Now, what is the first item? Read again. Any allowance granted to meet the cost of travel on tour or transfer. It should be official, okay? Official. Whatever official traveling allowance that you get, you can utilize it for the respective purpose and claim exemption for that. Are you with me? Are you with me? Second one, daily allowance or per diem allowance. What is daily allowance? Just like daily bata. Not that bata company, okay? Daily bata. What is that? Say for example, I am in transportation, okay? I am an employee. I am a bus driver. I'm a bus driver. Every day when I perform my duty, I'll get a daily bata for my food and other things. For my basic needs, my employer is giving me a daily bata. That is fully exempted if I utilize it. I'm getting 1,000 rupees every day and I'm spending 1,000 rupees for my food and other things. That entire 1,000 will be fully exempted. I'm getting 1,000, spending 800, then 200 will be taxable. Are you with me? Don't think that how department will know about how much I spend and all. For the time being, stick on to the theory. First you learn the compliance. Then we will discuss about the planning and evasion, okay? First you study the compliance and qualify the exam. Then we will think about the evasion. It is our responsibility to disclose everything. It's not the responsibility of assessing officer to simply come and pull your leg. Pay the taxes, da. Pay the taxes, da. It's not like that. It's your responsibility to disclose everything by yourself. That is called as self-assessment in income tax. Are you with me? So think about the complaints. Understand the complaints, then you will understand the nothing. You study the complaints. That's it. Okay. You don't have to understand anything for the time being. Now, moving on to the third one. What is the third one? Any allowance granted to meet the expenditure incurred on conveyance in performance of duties of office. We say conveyance allowance. That means there's just like a cab from office to home and home to office, from one place in office to another place, one branch to another branch, like that. If you are getting a conveyance allowance for your transportation, you are getting an allowance, and if you utilize it for official purpose, don't worry, nothing shall be taxable. Then what is the next one? Helper allowance. Helper allowance means official. What is that? Your manager has given you some assignment. You have appointed an official helper. Are you with me? And for that helper, your manager is paying you not the company is paying you an allowance. And you are making the payment to that helper. Nothing shall be taxable in your hands because you are making that allowance to your helper. If you are taking some amount from that, then that shall be fully taxable. Are you with me? official helper doesn't mean you are domestic servant and all. Domestic servant is not an official helper. Are you all here? So helper allowance means it should be for the official purpose. Then what is point number 5? Research allowance. What is research allowance? You want to do some post graduation or you want to do some kind of research. Your employer is promoting that and he is giving you a allowance for that, and you're utilizing it for the respective purpose. Then balance amount, if any, only shall be taxable. Utilized amount shall be fully exempted. And which is the last one? Uniform allowance. As the name suggests, it is for the uniform. In our company, every employee have to wear a uniform. For that, your employer is giving you an allowance. That you have fully utilized. Nothing shall be taxable. Are you all with me? Are you all with me? Very good. So this is what is the allowances. Okay. Conveyance allowance for personal purpose, sir. Is it taxable? If I solve any question there, only travel allowance, conveyance allowance, etc. How do we know this is for personal or official purpose? Your employer is giving you some allowance, okay, and the question says you have utilized it. That will be obviously for the official purpose. If the employer is giving you that, say for example, research allowance, you can spend it. That is only personal purpose only. Okay, but you have utilized it. No problem. You will get the exemption. Travel allowance is normally, why should employer give you travel allowance for your personal travel? Just think, okay, employer will never give you travel allowance for personal travel. Okay, I want to travel to Ukraine. Will my employer give me a personal allowance for that? Sir, I want to travel to Ukraine. No. If they give that, that is not allowance. It is called as perquisite. We call it as leave travel concessions. And there is another treatment for that. Are you with me? So, travel allowance, daily allowance, conveyance allowance, etc. only for the official purpose an employer will give. Arati, hope you understood. Super. Not visible, not clear. Okay. Is it visible and clear? I think yes, but there is some problem with this Zoom, I think. All right. So moving on, friends. So which all are the allowances that comes under this category? Please respond and repeat. Number 1, traveling allowance. Number 2, daily allowance or per diem allowance. Both are same. Daily allowance or per diem allowance. Then what is number 3? Conveyance allowance. Number 4, helper allowance. That is official. Number 5, research allowance. And number 6, uniform allowance. This helper allowance, personal means domestic servant. For that, there is a separate treatment under perquisites. Are you with me? Are you with me? That you will understand when we complete the perquisites. So it is like that. So category number 2, these allowances, if you are expended the amount for the respective purpose, it shall be fully exempted. If there is something balanced, then that balance shall be fully taxable. That's it. So moving on, friends, moving on with the next category. Can you read the heading? Small one comparatively. What is that? Special allowances under section 10, subsection 14, clause number 2. We have just finished clause number 1, where exemption depends upon actual expenditure. And what is clause number 2? Fixed exemption. What is fixed exemption? Irrespective of the fact that whether you have expended it or not, you will get the exemption. Whether you have expended it or don't expend it, don't matter. Don't worry. You will get the exemption. That is called as fixed exemption. And I have only selected certain important items under fixed exemption because there are a lot of items under fixed allowances. Fixed exemption. Hilly area allowances, compensatory allowances and all. There are a lot of items. I mean, if you are very good in your memory, study everything. Or rather, you study this much minimum. And what is the first one? Can you read the first one? Any allowance granted to an employee working in any transport system to meet his personal expenditure during his duty performed in the course of running such transport from one place to another, provided such employee is not in receipt of daily allowance. What does that mean? I am a bus driver and I am not in receipt of daily allowance and I'm getting a allowance that is called as transport allowance. Income tax will treat it as a transport allowance. Then what is the difference between daily allowance and transport allowance? What's the difference between daily allowance? Daily allowance means for the daily duty. In certain employers, say, for example, I am a tourist bus. We call it a stage carriage. Okay, I'm a tourist bus or a stage carriage. Every day there will not be a trip. Every day there will not be a trip. During season time there can be. So whenever there is a trip, my employer will give an allowance. That is called as daily allowance. Are you with me? I am working in line bus. That means our ordinary bus. Daily there are trips. For those employees, some employer will give what? Monthly or yearly allowance. And that is called as transport allowance. Are you with me? Are you with me? The purpose is the same, but the treatment is a little bit different in income tax. If you're getting it daily, then you have to spend it daily, or you have to spend it for the respective purpose. Then you can claim exemption. If you are not getting it daily and you are getting it in a lump sum or monthly or weekly or whatever it is, then the treatment is like this. So read this again. Any allowances granted to an employee working in any transport system to meet his personal expenditure during his duty performed in the course of running such transport from one place to another, provided that such employee is not in receipt of daily allowance. If you are receiving daily allowance, then the treatment is this. You check how much you have expended, that expended amount exempted, the balance will be taxable. If you are not getting it daily, you are getting it monthly, then the treatment is like this. And what is the treatment? 70% of such allowance up to a maximum of 10,000 per month shall be exempted. What does that mean? Let's see an example. Okay, listen. Say I'm not in receipt of any daily allowance and I am in transportation sector and my employer is paying me an allowance, not daily. Okay, the allowance that I get is say 20,000 per month. How much is my allowance? 20,000 per month. Are you with me? Are you with me? How much is my total allowance in a year? If it is 20,000 per month, then how much will be the total allowance? 2,40,000. How much can I claim as exemption under section 10(14) clause number 2? How much is my exemption? 70% of such allowance up to maximum 10,000 per month. So per month 20,000 into 70% is how much? 14,000. Will I get 14,000 per month as an exemption? No, I will not get up to 14. In such case, maximum 10,000 into 12 months, and that will be 1,20,000. The rest 120 will be fully taxable. Is that clear? Normally it is 70% of that allowance received is the exemption, but that 70% figure cannot exceed 10,000. So we can say either 70% or 10,000, whichever is lower. Have you understood? Either 70% or 10,000, whichever is lower. That's what they are saying. It is 70%, but it shall not exceed 10,000. Are you all here? Are you all here? Traveling allowance is only for person with disability. That is different. Okay, that is different. This is different. That is different. Okay, yes. Now, so this thing, they are not mandating that you should have a disability. Okay, don't worry. Moving on. Can you read the next one? Children education allowance. What is the purpose of children education allowance? You tell me. What is the main purpose of children education allowance? It is for the education of your children. Yes or no? Yes or no? Say if the employer is giving a children education allowance to you, when is the lunch break? Okay, I'll give you lunch break. Don't worry. Okay, think about the topic right now. Don't think about lunch. So how much is the exemption, friends? 100 per month per child up to a maximum of 2 children. Are you all with me? If you are getting a children education allowance, your exemption is fixed. How much is the exemption? Huge figure it is. ₹100 per month. That too. 2 children. Enjoy. Okay, they are saying ₹100 per month per child up to 2 children. That's it. It was introduced in 1961. At that time, 100 rupees was huge amount. But right now, 100 rupees is like per day, the cost will be more than 100. Okay. So what to do? We have to follow this. So the point is, Then interesting fact here is whether your children actually studies or not, you will get this exemption. That is what is called fixed exemption. Are you with me? Say your children is simply sitting at home and you are getting this exemption. You can take, you are getting this allowance. You can claim exemption. That's why it is called as fixed exemption. And how much is the exemption? 100 per month per child up to maximum 2 children. Not yet over. One more thing is there. Any allowance granted to the employee to meet the hostel expenditure on this child. Then, how much is the exemption? 3 times that of education allowance. Lavish. How much is the exemption? 300 per month per child up to a maximum of 2 children. Again, it's an old thing, but it's still relevant. Okay. So what they are saying is you can claim an exemption of up to 300 per month per child up to a maximum of 2 children. Are you all with me? Are you all with me? Children education allowance 100 per child per month up to maximum 2 children. What if you have 5 children? Out of 5, only 2 you can claim exemption. The rest 3 will be fully taxable. That only 2, maximum 100 per child. Are you with me? Are you with me? How about hostel education allowance or hostel expenditure? 300 per child, maximum 2 children per month. 300 per month per child, maximum 2 children. Yes. Now there is an interesting thing. I've told you that whether your children actually studies or not, you will get this exemption. Yes or no? But there is one thing. If your children actually studying outside India, you are not eligible for this exemption. Even if they don't study, we have no problem. But if they study overseas, you are not eligible for exemption. Are you all? But in India, most of the children will be definitely studying. So they are not restricting that. But what they are saying is, if your children is actually studying overseas, you are not eligible for this exemption. That allowance is fully taxable. Are you with me? You will lose that 100 per child per month up to maximum 2 children. Periya loss. And you will also lose 300 per child per month, maximum 2 children also you will lose. Provided, read this note, no exemption is available in respect of education and hostel allowance received for any education of children outside India. Is that point clear? Is that point clear? Yeah. So, give me a second. And you have to study one more thing, okay? You have to study one more thing here. Actually, I forgot to add that here, okay? So I'll write it here. Please take a note of it, okay? I forgot to add that here. One more fixed exemption you have to study. So I'll write it here. Please take a note of that in your notebook for the time being, okay? One more item. I accidentally missed it. So I'll write it here. That is, any transport allowance granted to under this category, under fixed exemption category, that is item number 1, 2, 3, 4, the fourth item, okay? Any transport allowance granted to an employee, who is blind, deaf, or dumb, who's blind, deaf, or dumb, or orthopedically handicapped with disability with disability of lower part of the body. Of lower part of the body. Of lower part of the body to meet his expenditure, to meet his expenditure, to meet his expenditure, to meet his expenditure for commuting between his residence and place of duty. His residence and place of duty. Let's understand how much is the fixed exemption. They are saying 3,200 per month. The exemption is 3,200 per month. Actually, that space was for this traveling allowance, but I think it got deleted. Okay, when I prepared this, accidentally it got deleted. So 4 items were there under fixed exemption. Which all are the 4 items? Number 1, allowance given to an employee who is working in a transport system to meet his personal expenditure during his duty performed in the course of running such transport system from one place to another, provided such employee is not in receipt of daily allowance. How much is the maximum exemption? 70% of that allowance subjected to maximum 10,000 per month. Now, what is number 2? Children education allowance. And how much is the exemption? 100 rupees per month per child up to maximum 2 children. What is number 3? Hostel expenditure on his child. And how much is the exemption? 300 per month per child up to maximum 2 children. And the last one is available, exemption is available only if the employee is blind, deaf, dumb. Blind, deaf, dumb. Are you with me? Or one more possibility. What is that? Orthopedically handicapped with disability of lower part of body. What does that mean? He has some disability with his legs. He has some disability with his legs. He is getting a allowance to meet his expenditure for commuting between his residence and place of duty. Then how much is the exemption? 3,200 per month is the exemption. Are you with me? Is that point clear? So 4 fixed exemptions are there for the allowances. Are you all here? So these are the items that they normally test in exam. What is this? B set 741, Kalai Selvan 400. Is that some kind of an agent code or something? You are planning for some attack or something on me? So they're using some kind of code and all in the chat. Okay. Now listen. So the point is exemptions under allowances. That's what we were discussing. Category 1, fully exempted. Category 2, partly exempted. Category 3, fully taxable. Can you give me an example for fully taxable? Food allowance, then DNS allowance, then washing allowance, then dress allowance. Uniform allowance exempted. They simply said dress allowance, it is taxable. Don't ask me, sir, uniform is also a dress. It's not like that. Uniform allowance is only for the purpose of uniform. Dress means any dress I can buy, including uniform. Don't worry. Dress allowance fully taxable. Uniform allowance only is exempted. Are you with me? Food allowance, drinks allowance, washing allowance. Then, come again? Entertainment allowance, interim allowance, festive allowance, then puja allowance. Every type of allowance definitely taxable. Apart from these 2 categories, whatever allowance that you're seeing will be fully taxable. Are you with me? Are you with me? First component done. That's all about the first component. Let me extend a little bit more. Okay, I'm not planning to leave you for lunch right now. Let me extend a little bit more. Why? Because afternoon there is a danger. What's the danger? If I stick on with the theory, no, you don't sleep. You will die. Sleep, very simple. Okay, you will definitely die because see, we have questions in salary. Okay, we have questions from salary, but the problem is, only after completing the salary topic, I'll be able to make you solve some questions because that question contains everything in related to salary. Passive sum questions is normally like that. That's why I've given you some simple question in HRI. Let's not waste time by doing some basic questions. Okay, basic questions we can make it color, but doesn't serve the purpose. Revision class 4 days, passive sum question, but only after completing the salary. So that's why I will definitely make it very dry. Don't worry. Trust me on this. It will be very dry in the afternoon. But after the theory, what will happen? Maja varamata. Some mattandam varu. Okay. Maja ellam varamata. Some mattandam varu. Don't expect a lot of, what do you say, entertaining session. Okay. If it was regular, I would have definitely given you some entertainment also in between. But revision, no entertainment. Okay. Yes, entertainment will come when the result come. Okay, when the result come, definitely you will get the benefit. Okay, no pain. Very good. So moving on to the next item, friends. What is the heading? Treatment of pension. Before that, let me address the online doubts. I forgot in between. Okay, yeah, they were discussing some kind of agents or something. Oh, they are asking about my material. Okay. We can choose only first 2 children or any children you can choose. The most beneficial manner. Okay. When is the lunch break? Don't worry, I'll give you. Okay. We can choose only the first children. Okay, no. Any children, no problem. Allowance for per child is 1,000 per annum, but exemption is 1,200 per annum. No, it's an exemption. You cannot claim loss. Exemption means what? We will not tax you. If it is an expenditure, then okay. Have you understood? Say the allowance in total is 1,000 and the exemption is 1,200. Don't take 200 as a loss. Exemption always subjected to actuals. Otherwise, it will be deduction or expenditure. Then 3,200 only. Okay, that is something else. Oh, you are talking about on my website. Okay, free of cost. Day. Entertainment allowance, sleep mode started. Yarda, Aishu, don't sleep, okay? And home sipping tea, we feel sleepy. Don't sip tea. Problem solved, right? Transport allowance other than deaf or blind. Transport allowance other than deaf or blind. Yes, taxable. No gain. Already experienced painy result, sir. Don't worry. Okay, don't worry. Result allam pain illa. Effort and painful. Result na simply check and cry, okay? Adli enna pain. Understood, sir. Thank you. Lunch break, entertainment allowance, other than exempted allowance, taxable. For twin baby, twin na 2, right? Avloda. Adoda nirthadunga. Okay. Yes. Twin means 2 children. Done. Don't think about the third one. Problem solved. Okay. Yes. So we'll complete the pension right now, friends. So the heading is treatment of pension. What is pension? Quickly tell me, what is pension? After retirement, you should have some nyam. Yes or no? You will not get what? Salary. So what the employer, he will give what? A monthly sum to the employees. You can make use of that monthly sum for your living after retirement. Are you with me? That monthly sum is said to be what? Pension. Are you all listening? Pension means any emoluments that you get from your employee after retirement can be called as what? Pension. Now listen, friends. Normally the pension is monthly. You will get the monthly pension. Are you all listening? Are you all listening? Say for example, I am an employee of this particular company and I am getting monthly pension of rupees 5,000. I am getting monthly pension of how much? Rupees 5,000. I required some urgent money. I required some lump sum money urgently. I have an option. It is just called as commutation of pension. Just like discounting bill from the bank, I can go to my employer and I can say that I don't want monthly pension. I am planning to take a lump sum amount by commuting the pension. Are you all listening? I am planning to take a lump sum amount by commuting pension rather than accepting monthly pension. And this process is called as what? Commutation of pension. So you can divide pensions into two. When from the perspective of income tax law, you can divide pensions into two. Number one, commuted pension. Number two. First of all, let's understand uncomputed pension. What is uncomputed pension? Monthly pension that you receive shall be fully taxable under this head. Whatever monthly pension that you get shall be fully taxable. You will not get any exemption. Under which head it shall be taxable? Salary, because it is from on account of your employer-employee relationship. So you have to definitely taxable under the head salary. So uncommuted pensions are fully taxable. And how about commuted pension? Can you read this? Commuted pension means converting their future right to receive pension into a lump sum amount receivable immediately. Future you will get it monthly. You can ask for a commuted pension and actuary does the valuation. There's a person called actuary. Okay, that actuary does the valuation and he will give you a lump sum amount. Are you with me? Don't ask me how the actuary does the valuation. That you have to go and ask to the actuary. Just like relying the report of an expert. Hope you have studied this in your audit, relying on the expert's report. So actuary is considered as an expert for us. So we are relying on the valuation of actuary always. So the point here is, if you are commuting the pension, then department say you are eligible for an exemption. Are you with me? Are you with me? If you are commuting your pension, then normally you are eligible for exemption. And that's what we are about to discuss. So the exemption can be computed. Whose fee is more than you can claim the baby fees beneficially? I think they are discussing something else. Okay. You're talking about educational allowance. What's the doubt? The first birth is twins. Then that's it. But if the first birth is single child, then the second birth is twins. Then all three we get that exemption. No. It is under leave travel concession. Okay. Prakalya, ippadi solli kodukade. Adu LTC. Here only two, whether it is twins, triples, quadruplicates, whatever it is. It is there only for LTC, leave travel concession, under 10 subsection 5. You can check the Income Tax Act. Under IT Act, the first one is twins or not. Under allowances, you will not get it. It is under LTC, 10 subsection 5. Okay. Not here. Yes. So, moving on, friends, moving on with the next point. Can you read the heading? Type of pension, and we were discussing commuted pension. Commuted pensions can be splitted into two. Okay, commuted pensions can be splitted into two. For other employees and employees of central government, local authorities, statutory corporation, members of defense services. Are you all here? Are you all here? Akka, don't worry. It is under 10 subsection 5. During lunch break, go check the act. Okay, it is there. Now listen. So, listen friends. The point here we are about to discuss is, if you are an employee of central government, local authority, statutory corporation, or member of defense services, you can claim full exemption for that entire commuted pension. Are you with me? Are you with me? You can claim full exemption for the commuted pension if you are a CG, local authority, statutory corporation, or a member of a defense services. One is missing over there. State government employees, they are not mentioning. So, state government employee here will be considered as an other employee only. Are you with me? Are you with me? Now, so for central government employee, local authorities, statutory corporations, and members of defense services, whatever amount that they get due to commutation of pension shall be fully exempted. And what if you are an other employee? What is other employee? a private company employee or a state government employee or a normal public company employee other than government company, then what will happen to your commuted pension? You have to divide that into two. You have to check whether the employee is in receipt of gratuity. What is gratuity? What is gratuity? Listen, there are different types of retirement benefits. Okay, pension, gratuity, provident fund. These are the main three retirement benefits. Are you all here? Are you all here? Pension means what? You and your employer will contribute something to the pension fund. Either it will be a national pension scheme or it is a separate recognized scheme. After your retirement, from that fund, you will get money for your daily needs. This is said to be what? Pension. Number two, gratuity. Gratuity means you are working for your employer for a longer period. After that, you are retiring. So, you have worked for a longer year and your good age was, you are actually in your good age, you are working with your employer. So, to show the gratitude, the employer give you some money for free at the time of retirement. And that amount for free is said to be what? Gratuity, gratuitous. Are you with me? Just like a Thanksgiving. You don't have to contribute anything. You being employee don't have to contribute anything. The employer will give it for free. That is gratuitous. And it is called as gratuity. Third one, provident fund. Listen, imagine a situation. During your salary period, you are enjoying all the salary. You haven't saved anything. After 60 plus, the pension will be very less. You have expended the gratuity as well. Now you don't have money. If you don't have money, you will be a headache for whom? If you don't have money, you will be a headache for whom? Children are. No, children will say tata bye bye. And they will migrate to Europe and all. You tell me, if you are a headache, you don't have money, then you will be a headache for the government. Yes, of course. You will ask for the governmental benefits and all. Are you with me? You will come to the government hospital and you will take all the government routes where there is a concession or where there is free. So government don't want that to happen. So they came up with a thing called provident fund. You save money. You save money for whom? For yourself. After retirement, you will get another amount for your savings that you made in your employment period. That is called as what? Provident fund. Both you and your employer have to deposit something to that particular provident fund. And that provident fund will grow with interest, with compounding effect. And your retirement time, you will get a lump sum amount so that you will be financially, comparatively stable. You can spend that also. You can expend that also and you can say that I am poor. Okay, then government cannot do anything. So what they are saying is 3 types of retirement benefit. Number 1, pension. That is a statutory amount. But to the pension fund, both the employee as well as the employer have to contribute. Second one, gratuity. That is free. That is from the pocket of employer. Third one, provident fund, savings. You save, your employer also will provide something from his pocket. Towards the maturity, you will get a lump sum amount. Are you all with me? Out of these 3, we are talking about what? Pension right now. So pension, commutation for other employees, for claiming exemption, the first thing that you have to check is whether you are in receipt of what? Gratuity. If you are in receipt of gratuity, your exemption will be like this. If you are not in receipt of gratuity, your exemption will be different. Are you with me? So the criteria depends upon whether you are in receipt of gratuity. Now let's see how to claim the exemption if you are in receipt of gratuity. Listen. Exemption shall be, read this, 1/3 of amount of pension which he would have received had he commuted the whole of the pension. That simply means, I'll give you an example to understand this. Say for example, I have commuted 60% of my pension liability. Are you with me? I have commuted how much? 60% of my pension. You can partially commute. It's not necessary that you have to commute everything together. You can partially commute. I have commuted 60% of my pension and I received 6 lakh rupees. Received how much? Received 6 lakh rupees. Now say I am an other category employee who is in receipt of gratuity. How do you claim exemption? Read the table. How do you claim exemption? 1/3 of amount of pension which he would have received had he commuted whole of the pension. What department say? It is not 1/3 of the received amount. Rather, what they are saying is, if you would have commuted your entire pension, what would have been the amount received? That amounts 1/3. How do you calculate that? You received 60%. You commuted 60% and received 6 lakh. If you would have commuted 100%, you would have received 10 lakh. Yes or no? So 6 lakhs by 60% into 1/3 will be your exemption. And how much is that 10 lakh into 1/3? 3,33,333 will be your exemption. And from 6 lakh, you can claim that 3.33 lakh as exemption, and the remaining will be the taxable amount. How much is the remaining? 2,66,667. 667 will be your taxable amount. Are you all with me? In income tax, don't take decimals, okay? Always round it off. Don't consider any decimals when you compute the income. Always round it off. Are you all with me? Are you all with me? So the exemption is 1/3 of the amount of pension which he would have received had he commuted the whole pension. If you are in receipt of gratuity, you tell me, what if you are not receipt of gratuity? How do you claim the exemption? If the employee does not receive any gratuity, then you tell me, instead of 1/3, it is 1/2. 1/2 of the amount of pension that he would have received had he commuted the whole of the pension. Are you with me? For a better understanding, let's solve a quick question. Okay, it's a small question. Let's solve it quickly. So I want all of you to take question number 4. If you don't read it properly, you will go wrong. Okay, don't take this. It is not there in your a question sheet. Just go through. It's a study material question. It's your institute study material question. Just quickly solve this so that you will get a better understanding on pension and its commutation. Yeah, so in our book, it's state government employees exempted. In Income Tax Act, it is not exempted. Okay, they are only saying CG. Payment made by employer for appreciation of services rendered by the employee. That is gratuity. Yes. Sir, you please show me the definition of government employee. Okay. Any employee hired by government. Kindly, why state government employee, not a government employee? See, if they are saying government employee, then both state and center is covered. But in the act, they are saying central government employee only. So that's what I'm saying. Okay. If they're saying government employee, that will be both central as well as state. But in the act, they are only saying CG. Oh my God, my. Yes, ready with the answer? So we'll solve it together. Mr. Sagar, keep quiet and listen now. Mr. Sagar retired on 1/10/23, receiving 5,000 per month as pension. On 1/2/2024, he commuted 60%. Okay, what happened? Yeah. He commuted how much? 60% of his pension and received 3 lakh. So the first thing to notice, he was receiving a monthly pension of how much? 5,000. He commuted only 60%. Thereafter also he will get monthly pension of how much? 40%. Are you with me? If you are not commuting completely, you will get monthly pension for the remaining percentage. It is normally like that. And received 3 lakh as commuted pension, you are required to compute his taxable pension, assuming he is a government employee, he is a private sector employee, receiving gratuity of 5 lakh at the time of retirement. He is a private sector employee who is not in receipt of gratuity at the time of retirement. So let's understand. We'll take the case of government employee, which is a relevant PY. It is not specifically given in the question, but you tell me which is the PY. Which will be the PY? 23-24. So 23-24, his retirement date is on 1st October 2023. Yes or no? Yes or no? So from 1st October, that means in October, November, December, January, he will get 5,000. That is 1, 2, 3, 4 into 4 months. And how much will be the total? 20,000. Then February and March, he will get how much? 5,000 into 40% into 2 months. And how much is that? How much is that? 4,000. What is this 5,000 into 4? See, that is uncommuted pension because he commuted his pension only on when? Only on 1st February. From October onwards, you are getting, he retired on 1st October. So he might got 5,000 on October, November, December, January. Till January, he got 5,000 rupees. And on 1st February, he didn't commute 100%. He commuted only 60%. So he will get 5,000 into 40% on February and March. So that entire 20 plus 4, that is 24,000 is what type of pension? Uncommuted pension. Are you with me? And full uncommuted pension is taxable. You cannot claim exemption whether you are a government employee or some other employee. Are you all here? Are you all here? Whether you are a government employee or a non-government employee, full pension which is uncommuted shall be fully taxable. So here what we can say, government employee, we are assuming that is CG, okay? We are assuming that it is central government employee, and we can write 24,000 is fully taxable. Why? Because it is uncommuted pension. How about the remaining amount? Commuted pension, that is fully exempted. If you are receiving commuted pension of how much you got? 3 lakh. That will be fully exempted in the hands of government employee. Is that clear? Is that clear? How many of you did it right? How many of you get the right answers? All right. Very good. Now moving on with the second one. He is a private sector employee receiving gratuity of 5 lakh at the time of retirement. So he receives gratuity, and the amount of gratuity is irrelevant for us because we are only computing the pension. So what you need to do is a private sector employee who is in receipt of gratuity. How do you compute? How do you compute? Uncommuted pension, 24,000 shall be fully taxable. Yes or no? Yes or no? And how much is the commuted pension? Commuted pension, that is 60% commutation, that is 3 lakh rupees. How do you claim exemption? Exemption shall be 1/3 of pension had he commuted his full pension. That means 3 lakh by 60% into 1/3. Can you help me with the math? 1,53,366. 1,66,667. How much will be the remaining taxable amount? 1,33,333. So adding these two, how much will be your taxable pension? 57,333 will be your taxable pension. Is that clear? Is that clear? This is uncommuted pension treatment in the hands of a private sector employee who is in receipt of gratuity. What if you are not in receipt of gratuity? What if you are not in receipt of gratuity? Instead of 1/3, it will be 1/2. I think is a private sector employee and not in receipt of gratuity at the time of retirement. Then the answer is from 3 lakh. We'll write that separately. Okay. We'll write that separately. So uncomputed pension, 24,000 will be there. And for commuted pension, how do you claim exemption? 3 lakh is the total amount and 1/2 into 3 lakh by 60%. That will be how much? 2,50,000, and you claim the exemption and the remaining 50,000 shall be taxable. So the total amount will be 74,000. Are you all with me? In the first case 24, second case 157, 333, and the third case 74K. Is that clear? Lunch break, oh my God. It's only 1:30. You want a break right now? Okay, let's. Okay, all right. Since you are requesting, we'll do one thing. We'll complete gratuity, okay? Yes. You want break? Okay, go. Don't worry. Go. Pasikkudu sir. Okay, da. Okay, don't worry. Go. Can come back at 2:40, okay? 2:40, 1 hour, not more than that. அது மட்டும் தான் கிடைக்கும், okay? Not more than that, okay? 2:40 PM. Is it 1 hour? Ah, yes.